Hi, I'm Yuri Poletto. I am an insurance innovation advisor and founder of the Open and Embedded Insurance Observatory. Today, I will introduce you to Open and Embedded Insurance, and we'll share with you some insights from the observatory. So let's get started. I will start with some definitions to set the scope of Open and Embedded Insurance. Over the last couple of years, Open Insurance and Embedded Insurance have become two very popular concepts. And in the midst of such a big content production, I happen to see Open Insurance defined as a cool way to talk about bancassurance or degraded to a sub-product of open banking or even confused with open innovation. Open Insurance actually is neither a lexical expedient nor a temporary trend. Indeed, it is such a relevant business phenomenon that EIOPA, the European Insurance and Occupational Pensions Authority, launched a public consultation and released a position paper on Open Insurance. In its position paper, EIOPA provides the most exhaustive definition of Open Insurance so far, defining it as accessing and sharing consumers' insurance-related data between insurers, intermediaries, or third parties to build applications and services. In setting the scope of the Open and Embedded Insurance Observatory, we started from the EIOPA definition. At the observatory, we analyze any solution based on the access and share of insurance-related data and capabilities, usually via API, to enable data-driven insurance solutions and to make insurance a feature of a non-insurance product or service. So when we talk about Open Insurance and Embedded Insurance, we talk about two things: shared data on one side and shared capabilities on the other. But who are the subjects involved in this data and capabilities sharing? We have identified four main subjects, or better, four clusters of subjects. On the one end of the landscape, there are the end users. These are the individuals and organizations that buy and use insurance services. Open and embedded insurance are implemented in the benefit of those subjects. Then there are the three other clusters: providers, enablers, and partners. Let's see those clusters one by one, and let's start from the shared data use case. In this case, since for insurance in the European continent doesn't exist yet the equivalent of the PSD2 directive that created an obligation for banks to open their data to third parties, insurers today play the role of data users rather than those of data providers. As we all know well, insurance business is based on data, and insurers use big sets of data to take their business decisions. In the last 10 years, thanks to digitalization and the internet, particularly, the number of data available to insurers has incredibly increased. As well as today, we have infrastructures, technologies, and tools that didn't exist in the past, and that enable us to share those data in real time and to transform those data into insights that we can use for better decision making. Just think that by early 2020, mankind had produced approximately 44 zettabytes of data, or 44,000 billions of bytes. And over 90% of this data have been produced in the last 5 years. So those data come from several sources: satellites, internet, connected devices, and insurers can use those data for their business decisions. So returning to our map, insurers today are big users of data that are provided by several kinds of providers. Today, the best available way to share data are APIs. So we have an infrastructure, the technology to share data. We don't have yet a standard format for data, even if there are several projects around the world with the ambition to create this standard, like the Free Insurance Data Initiative in Germany or the Camelot network in the UK. To help insurers and data providers share data and to help insurers ingest those data and transform them into insights that can drive better business decisions, there is a third category of subjects. We refer to them as enablers. Enablers are the companies that, through the application of modern technologies like big data analytics and artificial intelligence, transform data into insights. Now, let's look at the second use case, shared capabilities. Here, the roles are inverted. If the rationale of shared data is providing insurers with data from external sources, when we talk about shared capabilities, we talk about insurers providing external players with insurance capabilities to let them offer insurance services to their customers. So in shared capabilities, insurers are the providers and other subjects are the users of capabilities. This use case is nowadays commonly known as embedded insurance. Actually, distributing insurance via alternative channels is not something new. Just think to bank assurance or affinity distribution. So why today there is this interest for embedded insurance? Let's put it into context. The growing digitalization that is changing DNA of all industries is making it easier, faster, and cheaper than ever before for non-financial companies to offer financial services to their clients. As well articulated by Matthew Harris, a partner of Bain Capital Ventures, financial capabilities are becoming a native element of the technology and business model toolbox of modern digital companies. In the mid-90s, we witnessed the beginning of the commercial use of the internet. Initially, we used the internet by developing online versions of existing businesses, and then that evolved into building new services and new markets that have in connectivity the core ingredient. The cloud followed with a similar path. Initially, software companies made their software accessible from the internet, and they changed the rules of the game by rebuilding their applications as web native. In a completely similar way, we initially used the mobile by making websites built for a desktop accessible also from mobile. And then we moved on creating new services, think to apps, that have the core ingredient in mobile. This toolbox, consisting of the internet, cloud, and mobile, is enabling us to transform traditional financial services into digital services. And now we are witnessing a new evolutionary step with financial services moving from a business model in their own into the fourth element of this toolbox. Financial capabilities such as payments, lending, and insurance are getting combined with the connectivity, internet, intelligence, cloud, and ubiquity, mobile, as the fourth element of the toolbox with which new companies and new markets can be created. Payment services have been the first to evolve. Shopify, a $36 billion software company that helps small businesses go online and build their own websites, today sees revenues from digital payments as its main source of revenue. After payments, it was the turn of other traditional banking services like lending, and now it's time for insurance. Companies like Boost, Cover Genius, Wacom, Casco, Penny.io, Cover offer the technology, capital, compliance, and licensing layers that allow innovative insurance companies, innovative companies from potentially any industry to build, embed, and manage insurance programs. And this is an example of embedded insurance in action. On Amazon, a few days ago, I purchased the coverage offered by Cover Genius in just 2 steps, less than 10 seconds. The Open and Embedded Insurance Observatory mission is to capture the global applications of open and embedded insurance, analyze them, and extract meaningful insights, and share those insights with the members of the observatory. The observatory is the most comprehensive multi-source and multi-market research on the open and embedded insurance domain, based on the ongoing observation and decoding of the global applications of open and embedded insurance. At the observatory, we analyze the information captured, connect it to draw a coherent and meaningful view of the market, and deliver actionable insights on the success cases and lessons learned, leveraging on our advisory experience, of course. This know-how is shared through one-to-one workshops with the members of the Observatory and discussed during the Observatory's plenary meetings. The main topics covered by the Observatory are grouped in, can be grouped in 4 clusters that are setting the new scenario, analyzing the impact of open embedded insurance on the main insurance processes, analyzing the impact on distribution and customer satisfaction, and of course, focus on critical issues and constraints related with the applications of open embedded insurance. Now, the Observatory have been analyzing those topics for quite a long time now. And now I am pleased to share with you some of the insights that we produced. In this chart, we have grouped an analysis of the 3 main levels of integration of embedding that we have seen capturing the market, combined with 3 of the main drivers of adoption of open and embedded insurance. And for each cluster, we have identified some significant use cases with the organizations involved. Regarding the drivers of adoption, for example, 3 of the main are adopting embedded insurance as an additional source of revenues, on insurance side to enter new markets, and on distribution side coming from the commissions arising from the sale of insurance. Through open insurance, particularly through external data, insurers can improve their core KPIs. And by embedding insurance with non-insurance core services, distributors can provide better customer experience to their customers and increase customer loyalty. Here we have grouped some of the main markets where embedded insurance is applied. Actually, at the Observatory, we have analyzed over 200 use cases grouped in 19 clusters. Here we have 12. So starting from mobility and auto, obviously a very big market also for embedded. Manufacturers that embed insurance coverages with the products they produce. Fintechs, neobanks, digital wallets, gig economy, the travel events market, property, prop tech, business services, utilities that very frequently embed insurance to their core services, membership clubs, cybersecurity, very interesting embedding cases from cybersecurity companies embedding cyber insurance, afterlife, retail. As I said, we have analyzed over 200 use cases. Here on the right, we have indicated some, for example, Cover Genius in the US, in partnership with Booking.com, eBay, and Automatrix, have sold in 2 years over 2 million policies. Zurich, in collaboration with MediaMarkt and Saturn, have achieved over 4 million customers with their embedded programs. And recently, Amazon and Superscript announced a new partnership in the UK to provide Amazon business customers with coverages provided by Superscript. Now, when we talk about new models like open and embedded, we always need to adopt a mindset non-short time oriented. To use the words of Warren Buffett, time is the friend of the wonderful business and the enemy of the mediocre. Particularly, during our interviews and workshops with the open and embedded insurance ecosystem players, we have identified a series of key aspects that emerge as key in designing and implementing a successful open and embedded insurance offering. Here, and this is the third insight that I wanted to share with you, I will show you this 5 of the main points that you need to look at when you think about launching an open embedded insurance program. Firstly, particularly from an embedded point of view, it's important in terms of customer experience that the insurer follow the digital distributors. What I mean that embedding insurance with a digital product or service is important that the insurance product is as fast and easy to purchase as the core product or service, and not the opposite. Secondly, we have registered that the percentage of conversions can increase 2-3 times when the insurance products offered are meaningful for the customers and logically related to the core offering. This is another very important point to make embedded a successful business. Third insight, to maximize the anchoring effect, the cost of the insurance coverage must be perceived as a fraction of the cost of the core product and service. Fourth insight, it's important to be aware of the complexities in using partners' data, both in shared data and in embedded insurance. The purpose of maximize the value extracted from those data from an insurance distribution and customer perspective. And fifth point, flexibility. Particularly insurers need to adopt a flexible mindset and to be open to adopt the new business rules when embedding their products and services, particularly when we talk about underwriting, when we talk about claims management, and when we talk about pricing business rules. So, thank you very much. I hope you enjoyed it, and I hope to see you soon. Thank you. Bye.